Federal Drive is presented by GEHA, Government Employees Health Association, proudly providing health and dental benefits to federal employees and their families. Visit GEHA.com.
The first 6 months of 2025 were challenging for TSP investors. The least popular funds outperformed their counterparts, and stock funds declined in the first quarter and then rebounded strongly in the second. Here to help us make sense of those market moves is certified financial planner Art Stein. Art, thanks for joining me.
Happy to do it, Terry. Thank you for having me.
So, Art, the stock market's had a rough start in 2025, but it bounced back strongly. For someone who's got money in the TSP, how should they be thinking about the ups and downs of the stock market?
I think it's very important for people who are invested in the TSP to realize that the ups and downs of the stock market are guaranteed. It's, just a very up and down investment. So the G fund is extremely popular because it never goes down. It just goes up a little bit each year. Well, when you look at the U.S. stock funds and the international stock fund, they naturally go up and down a lot. So if we look at the C fund, which is the most popular of the stock funds, it's an S&P 500 index fund. And in the first 3 months of the year, not surprisingly, given what was going on, it was down 4% in 3 months. And the S fund was down 8.9%, which was a really big decline. And as a result, people started pulling money from the C fund and putting it in the G fund during that quarter. And we can see, the percentage invested in the C fund go down, which was too bad because then they missed out on these great returns in the second quarter when just for that 3-month period, the C fund was up 11%, the S fund was up 12%. Very, extraordinarily good returns. So looking at the first 6 months of the year, combining those two, the C fund's up 6% and the S fund's up 2%. Another thing to point out is that the two least popular funds, which is the F fund and the I fund, did extremely well. The I fund in the first 6 months of the year was up 18.7%, a really fabulous rate of return. And the F fund was up 4%, almost double what you got in the G fund. But very few TSP participants are invested in either the F or the I fund, and so they missed out on that.
Well, it's a good reminder that the stock market is naturally volatile. I mean, in business school, we used to call it a random walk down Wall Street, right?
That's what we used to call it, and we still call it that. Over the short term, stock markets are considered to be, yes, as you say, Terry, quite random, the returns, the ups and downs. Sometimes it seems obvious why they're going up or down, but many times, although you'll see in the press reasons given, we really don't know. People don't invest in the stock markets because they're worried about a market crash and they don't like the volatility. But volatility is guaranteed. There's always volatility every day, every hour. And market crashes, we know they're coming. We almost had what is considered to be a bear market, which is a 20% or greater decline in a stock or bond market. We almost had one in the first quarter. C fund was down 19%, so just short of that 20% mark. And that's why people were pulling out. They're reacting emotionally, they're scared. But those kinds of declines are not unusual, and a 19% decline, not even really large compared to what we've had in the past.
I'm speaking with Art Stein. He's a certified financial planner with Arthur Stein Financial. I want to dig back into a couple of the things you mentioned up front about some of these funds that typically have less investment than the others. The I fund, which is the International Stock Fund, actually did better than the C and the S fund. Does this mean it's time to look outside the U.S. for better returns, or is this just a temporary shift?
Well, it means that last November, December was a good time to be putting money in the I fund. Now that it's up 18.7%, let's call it 19%, I don't know if it's going to keep going up or not. I mean, You see, this is the problem. When you get those big returns, that's when people start looking at putting money in. And that, might be a good idea. It might not. Nobody knows. The thing about investing in the stock and the bond markets, which is 4 funds in the TSP, the FCS and I, you need to, come up with an allocation that's appropriate for your situation and stick with it. And, when the stock markets are down, that's great for you if you're employed and you're buying. Of course, if you're retired, you feel differently about things, but that's also a good time to not be pulling money out of the stock market, to be taking it from the bond markets. Now, with the TSP, you can't specify when you're making a withdrawal from the TSP, you can't specify which fund you want the money to come from. It's going to come out proportionately. And that's a disadvantage of the TSP. But for investments outside the TSP, that's a better way to handle withdrawals.
Well, you mentioned the bond fund, and I want to come back to that as well, because the F fund, which is the bond fund, did better than the G fund, and bonds are usually seen as a safer option. So what does that tell us about the risk-return ratio there and how people should be thinking about safe harbors with the bond fund?
Okay. The F fund is riskier than the G fund. The G fund is called a short-term bond fund, but really it's constructed to just be a savings account with a high interest rate. Typically you'd be hard to get the same interest rate, but not impossible in the private sector in a savings account. The F fund is a true bond fund. It invests in intermediate term bonds, which means they mature in a 5 to 10 year period. It's based on the most popular bond index, the Bloomberg Aggregate Bond Index. And the price of those bonds goes up and down over time as interest rates fluctuate. Historically, the F fund outperformed the G fund about 2/3 of the time on a calendar year basis. The last 3 years, 2022 through now, very unusual. In the 2022, we saw historic declines in bond values because the Fed was raising interest rates. And that caused many people to, just think, well, I'll never want to do bonds again. But if you have your money in the G fund and really the bond fund to the F fund, you have to, assume that you're going to lose purchasing power and that the G fund's going to lose more purchasing power than the F fund over time. Now, past performance, no guarantee of future performance, but historically there's been, it's pretty strong evidence that after taking into account taxes and inflation, the purchasing power of bonds and bank accounts goes down.
So as you look ahead to the second half of 2025, what does your crystal ball say, and what should TSP investors be thinking about?
My crystal ball says, do not forecast. Nobody knows. My crystal ball says we predict that if you forecast what's going to happen in a 6-month period, you will look like an idiot most of the time. And my clients were long-term investors. We're putting money in stocks and bonds. We pick an allocation, maybe 60% in stock funds and 40% in bond funds, maybe higher, maybe lower, depending upon the client. And we stick with it. And when the stock market crashes, we end up transferring money from bond funds to stock funds to buy when prices are low. And when the stock market's doing very well compared to bonds, which is, again, a more typical situation, then we're selling stock funds to buy bond funds because we want to, lock in some profits and keep the allocation to what it is. So we do not forecast because nobody is good at forecasting. And of course, Terry, as you know, and as all federal employees and retirees know, these are just unusual times. Unprecedented, really. A lot of things that we assumed about working in and for the federal government turned out not to be true. I always thought that federal employees had great job security. Well, nobody thinks that anymore. And, there is a chance that benefits may be adjusted, although in the big, beautiful bill that passed, they pulled out the adjustments to federal benefits, which was great. I was so happy to see that. And that did, to me, seem typical, because pretty much every Congress has a group of people who are trying to reduce federal benefits. People get worried. I don't blame them for being worried, but it's never worked out. And even now, when the people who want to do that the most had the best opportunity to do it, they couldn't get it through, which is great. But on the other hand, so many people have been fired, let go, have quit in disgust. So it's very uncertain times. But that doesn't mean that stocks are not going to do well in the future. The economy can do well. The stock market can do well even if, the federal government's being gutted.
Art, thank you as always for joining us, and thank you for helping us take a rational and less emotional approach to investing.
Thank you, Terry.
Art Stein is a certified financial planner with Arthur Stein Financial. We'll post this interview at federalnewsnetwork.com/Federal Drive. Hear the Federal Drive on demand. Subscribe wherever you get your podcasts.
What makes a great leader in government? Christine Harada joins WEPA CEO Shane Canfield to reflect on her journey from aerospace engineering to the White House. In this episode, she shares lessons on public-private collaboration, leading with purpose, and why service, not power, should guide leadership.
Hello, and welcome to the Lessons in Leadership podcast. I'm your host, Shane Canfield, CEO of WEPA. Today, I'm joined by Christine Harada, former Senior Advisor at the Office of Federal Procurement Policy within the Office of Management and Budget. Ms. Harada, welcome, and thank you for joining me.
Thank you so much for having me.
You spent portions of your career working in both the public and the private sector. And from your experience, what makes leadership in the federal sector different than the private sector?
At the highest level, leadership in the public sector is very fundamentally at its core mission-driven. Right? The work is in the service of the public good, and the goals and the programs are frequently long-term, they're systemic, and they're incredibly complex. And success, isn't necessarily measured by quarterly earnings. We don't have that kind of drumbeat, but certainly more by the lasting impact that we have on Americans' lives. What's also unique about public sector is, in my view, the profound sense of history that you feel. And I think certainly I was very aware about the work that I was doing and how it builds on the efforts of those who came before me, and that future generations of leaders also depend on the decisions that were being made today. And that, for me, certainly provided a greater weight of responsibility.
That's a wonderful answer. And I was in the private sector for much of my career, and now WEPA is a nonprofit, and I really relate to what you said about being mission-driven rather than profit-driven. You've got a long-term view, and always at the core of it is serving others.
Yes.
Is there a moment that stands out to you from early in your career that influenced your leadership style later on?
I started out my career as an aerospace engineer, building satellites and airplanes. And when I first entered the workforce, my organization at the time had 120 people. We were a large company, 120 people, 4 women, and I was the only woman of color. I was also the youngest throughout the entire organization. And so, I remember having an experience when I was doing some engineering work. We had a design review, and I had seen some issues with the flight software that I pointed out. At the time, they're like, maybe it's not really that big of a concern. I was like, but in my heart, I knew that the issue was real and stayed with it. And sure enough, a few weeks later, that topic came up again, and we addressed it. Turns out my concern did indeed prove to be valid. And so it's just one of those experiences that really sank into me around ensuring that I am listening to everybody, period, end of story, within the organization, really thinking through about how do we take into consideration opinions from all different spectra. As a third-generation Japanese American, right, I was raised to be humble, keep your head down, and work hard, etc. But at times, leadership also requires you to speak up, do so politely, with courage, etc. Even though you may be the only voice in your room, but certainly trust your voice. It also really helped shape my belief around diversity. DEI programs right now are viewed in a negative light. We're all mosaics, and they become better because you have those different experiences, and that's really stayed with me throughout the entirety of my career.
The diversity issue is a really big one coming from the insurance industry. That's an industry which is working on that. It's really a diversity of viewpoint and perspective and experiences that does influence your business, and more diverse employee bases absolutely helps. Was there a time in your federal career, perhaps when you were at OMB, that you faced what you consider a real challenge, and how did you overcome it?
One moment that really stands out in particular was when I was serving as the Federal Chief Sustainability Officer during the Obama administration. We had set, like many administrations, had set some really ambitious goals, very, very, very ambitious goals around how do we think about making the federal government's operations much more sustainable. But the challenge wasn't so much about the scale or the technical capacity of the organization. A lot of it was really centered around the funding. We overcame this largely by being very strategic, helping out with blocking and tackling with the variety of legal issues or legal questions that might have come up, like how do we address this? Certainly in the federal government, you're more often leading through influence as opposed to pure form authority, and that you really need to listen deeply, communicate clearly with folks, building out those coalitions and engaging with your stakeholders. And I know many folks in government speak like that, but that is the truth.
As someone who's spent time in both the federal and the private sectors, what makes the relationship between the two sectors important?
Certainly, it's an absolutely essential partnership, and I would add on to that like nonprofits or philanthropic organizations. As I mentioned before, I'm Japanese American, and in Japan there's a symbol for thunder, which looks like 3 arrows pointing around each other in a circular pattern, kind of to represent the swirl, if you will, of clouds. And that's kind of how I view the relationship between the government, the private sector, and the nonprofit sector. The government frequently sets the vision, the policy, the direction, but of course it's the private sector that brings the capital, the innovation, the skill set, the capabilities, et cetera, to be able to execute. Partnering with that, of course, are the nonprofits who may be supporting the surrounding society. Public-private collaboration is not just about contracts or compliance, but it's also about figuring out what's your shared purpose. That's when real transformation can and does actually happen.
In life insurance, there's a concept, lifetime value, where bringing a new insured in costs a lot more money than the amount of premium. And so when you talk to commercial carriers, it's a similar kind of thing. You need to bring them into the concept that they're going to be with us 20 years, and after 5 years, you can ride through that. But it's a concept that isn't easy for commercial businesses to understand. That's a partnership too. Very, very similar. What advice would you give to somebody aspiring to become a leader in government?
There are 3 things, right? So firstly, around leadership in government, you want to make sure that you're leading with purpose. You want to stay grounded in your values, and don't underestimate the power of relationships. Remember why you entered public service in the first place, and that'll help carry you through some of the inevitable challenges that you're going to face. Making sure that you are also investing in relationships. In government, you rarely have full control, and I think this is, in my view, more important in government than perhaps in the private sector. You are frequently leading through influence. You are collaborating with very different parties who frequently have very different agendas than you do. And so building that trust, investing in building that trust and planting those seeds earlier and along the way in your career, I think is absolutely critical. And certainly last but not least, I would say, don't feel that you have to have it all figured out on day one. Absolutely stay open to the unexpected. Say yes to the opportunities that stretch you, and know that you can lead from wherever you are. It's not just about position or hierarchy. It's about the impact that you can have.
What wonderful advice, especially in today's world, which is a little topsy-turvy. Who is one person, someone you know personally or perhaps someone well-known, that's impacted your leadership style?
The leaders that particularly stand out for me are Colin Powell, a woman named Carla Harris, who was a managing director in investment banking, and then last but not least would be my father. Starting with perhaps the more famous one, Colin Powell. I read his biography, loved his perspectives and the rules of leadership that have been particularly influential for me, right? So get mad, then get over it. share the credit, perpetual optimism, a force multiplier, things of that nature. And hearing his story was certainly very inspirational for me. And so I certainly very much look up to him as a role model. The second person that I mentioned is a woman named Carla Harris. She's an African-American woman, became a managing director at an investment bank in the 80s, at a time when there were not that many women of color in investment banking in New York. And so she's published a book called Her Pearls of Wisdom. It's one of her trademarks. She always wore a pearl necklace, and she has Pearls of Wisdom around how can you be authentic and build relationships to be successful in super challenging environments. And she had a lot of guidance on the importance of finding sponsors and mentors. And certainly last but not least, my father is really my why for I do a lot of the work that I do in the public sector. He started out life like many other, immigrant kids in poverty. He was a strawberry farm laborer. Japanese Americans at the time were not allowed to own the land, so we worked the land. He grew up in that kind of environment. And I just think it's absolutely neat that someone who came really he was dirt poor, to say it, and his daughter ended up working in the White House twice. It's quite the American dream, and I would very much like to have that opportunity available for other people as well.
Well, wonderful, absolutely wonderful. Christine, thank you very much for your time today and all of these learnings. It's really good, impactful. Thank you for sharing.
Oh, thank you so much for having me. I really enjoyed it.
I'm Shane Canfield, CEO of WEPA. Until next time on Lessons in Leadership.
Find the full podcast and future episodes of Lessons in Leadership on the Federal News Network app and anywhere you enjoy your podcasts.